Good evening and welcome to PreciseAlgorithmTrading.com. It is Friday, August 18th, 2023, and this is our website, and you'll find our daily reviews right there. We'll flip right over to, actually, let's do StockCharts.com first. Bullish percent indexes are a measure of bullishness in these different markets. So it really is, it's the percentage of stocks in a market that are on a certain kind of a buy signal. It happens to be a point and figure buy signal. So when you look at this right here, it says 66.66% of the stocks in the Dow Industrials are on a point and figure buy signal, and there are 30 stocks in the Dow, so 66.66% of them are on a buy signal, and that means that the balance to 100%, which is 33.33, is they're on a sell signal. So that is a measure of bullishness in the market, and that is all it is. But we read these charts from left to right. The last chart on the right is the one that, or the last column on the right. It's a column of O's, and that means we've had um, uh, basically a pullback situation, and but at the same time the previous columns of X's have exceeded each other to the upside, and we don't have that situation to the downside. So this is a point and figure buy signal itself, which is basically a medium to longer term buy signal. Short term, we're on a sell signal, or at least weakness. So, all right. With that said, I'll go to the rest of them. Here's the NYA. It's a New York average. There's like 8,000 stocks or something like that in the average. Uh, and this thing added on a new O today, and it went down 3.2%. And 51.28% of the stocks in that index are on a point and figure buy signal. And this is also a longer term, medium term point and figure buy signal, because the recent column of X's exceeded the previous column of X's to the upside, and we haven't had a column of O's exceed another column of O's to the downside recently. The transports have been going down, and they're unchanged for the day. The NASDAQ tacked on a new O to the downside, went down 2.56% today. And I don't know how many NASDAQ stocks there are, but 43.91% of them are on a point and figure buy signal. You can also say that less than 50% of them are on a point and figure buy signal, and therefore, you can make your own conclusion from that. But there's more bearishness than bullishness in the Nasdaq overall. However, this is a point and figure buy signal, not because the previous column it didn't exceed the one before it, but that one did, and there wasn't a sell signal in between. So, all right. The SPX added on a new O, down 4.48% today. 55.4% of those are that's it. There's 500 stocks there, so you could do the math and figure out how many that is. But 55.4% of them are on a point and figure buy signal, and this has had some weakness recently. However, again, it's a point and figure buy signal on this chart all by itself, and it was a pretty long-term one there. And now we've had some pretty serious pullback. And OEX, that's the S&P 100. So of the 100 stocks, 57 of them are on a point and figure buy signal. And then the last one that I really pay attention to or focus on is the NDX, which is the NASDAQ 100. So obviously 100 stocks in there, and 39 of them are on a point and figure buy signal. And this is a point and figure sell signal because this column of O's exceeded that one to the downside. Until that happened right there at 56 or below 56, this thing was also on a point and figure buy signal. Now, you could interpolate a little bit, or I will, and say a lot of times if the NASDAQ came down this hard, then and the other ones, I mean, this might be preceding the other ones making this similar kind of a move long term. That is a big, very big might. I mean, there's no reason to act on that in any way other than to say that's possible. Alright, and then let's go to the charts. So here's the S&P 500. This is that sell-off, and you can see that the point and figure sell-off that we were just looking at, looks the same, kind of like, yeah, this chart kind of backs it up. So one usually happens before the other one, and they feed off each other. If you follow this long enough, you kind of see a pattern, which is why I do it. Yeah. Let's look at, oh yeah, I pulled this down on purpose to show the average true ranges. Typically when you get to the bottom of 3 average true ranges, which is what that is, you can see you can get a bounce. This one didn't even make it all the way. You can get this situation where you get a bounce and then it goes further. And I'm telling you right now that this market is potentially set up to do that. And I have reasons to say that. I just think this thing went up quite a bit and now it needs to pull back a bit. But I do think we could see something like that line right there, before we roll over again. And I did actually draw this, if it cooperates real quick. Ugh. The futures charts tend to, when I go back and forth, it takes a second and might give me an error. Alright, that's fine. So this is, or I drew on some lines, top of the channel. Channels are a big thing in the markets. For those who don't know, you can draw a line across like that contains the price action, and you can see that it happened. We could have done that way back here. In fact, I will. No, I won't. Yeah, I will. Sure. So you can go like this, and you can say, well, here's a, yeah, let's go there. There, and you can connect all those bottoms and contain the price. This is inside or up above it. That's all above it until it broke it, and then we can actually do the same thing to the upside. In fact, you can duplicate that, pull it up here, connect it where it makes the most sense, something like that, and it actually exceeded it to the upside before it got pulled back in. So that's that kind of a channel, and we could have actually made that a broadening pattern by connecting, activate, pull that out like that, and that's clearly, that was a broadening pattern on the way up. Well, you can see there's a little bit of a flare on the bottom of this going down. So that's the reason I have it drawn like that, and it's starting to be, not very broad, but it looks like it's becoming a broadening pattern to me. Alright, well, that's all I wanted to show with that chart. You can look at this obviously, or it's obvious to me, with all the different things. You can put in the index, or the different indexes, so the transports, the Dow, the NASDAQ, and so forth. And I do that, and I'm not going to, anybody that wants to do that can do that on their own. Alright, then we have the 1 hour chart on the right. So we're back on the ES here, which is the E-mini futures contract for the S&P 500, which is generally known as, it's kind of the overall barometer of the market. So this is an hourly chart, this is a daily chart, and this is a weekly chart, and typically people think of the markets as, the daily is the one that is really the most people are keying off of. Algorithms key off of it, individual traders key off of it, the big Goldman Sachs and those type of companies key off of it, JP Morgan, trading houses, and things like that. So it gets the most attention, and then basically trends develop inside from the 1 hour into the daily, into the weekly, and you can extrapolate it into the monthly and the quarterly even, and you can break it down into 15 minutes, 30 minutes, and so forth. So, all right, I don't want to get too far into all that, but here's the Dow, which, by the way, everything's bouncing a little bit today. I'm not saying it's over to the downside unless it's over for a little bit. This has been coming down pretty hard, pretty fast. I'm messing with some momentum stuff here at the bottom. I'm a big fan of momentum, and you can see that this is an indication of momentum. This is an indicator of momentum. This is too. And right now, we don't have a whole lot of reason to be bullish other than it's starting to look like it potentially could reverse. It's red. This is green. This is, it looks like it could be reversing. And if you look at the daily over here, it could be reversing. However, boy, this true Momo indicator in the middle doesn't look like it's done yet. There is not a whole lot of reason to be bullish. It looks like everybody's letting go to the downside, although the weekly charts do look okay. In fact, if we flip back to the S&P, the weekly looks fine. The Russell, actually we're getting a Bollinger Bands bounce, that means that the price went outside of the Bollinger Bands and then came back up in it. We are oversold in most cases here, and we're starting to look like this thing could possibly bounce. Now, I do think Monday is going to be a little bit of everything. You're going to see possibly, at any given time, you could see a Monday type crash too with a hammer candlestick type of a deal, which you can go back on charts and look at that, like 9/11 and the stock market crash of '87. You can find all sorts of times when things like that happen. So, that was the Nasdaq. Let's look at oil. I think oil's basically doing a fake out here. We're getting a pullback. I think we're going to pull back at least one more time because of the way waves work. There's a wave 1 down, wave 2 possibly up here. This is turned green, and if you go back on how the S&P worked, we had things turning green a few times along the way before they finally rolled over and did this. So there was a green spot. So it's kind of hit like a head fake, and you get usually, again, this is like wave 1 down, and we hardly had a wave 2 up and a wave 3 down, and that happens like that with the markets. 1 down, 2 up, and I'm guessing we're going to see a wave 3 down. And then I'm going to really be looking for a real reversal signal at that point. If I don't get it, I'm just going to have to miss the move. And then here's the transports, which have really sold off lately, and they're looking really overextended to the downside. And that means that if we start to see some, freshening up over here, and inside the point and figure charts, by the way, the bullish percent indexes, then we could really maybe possibly get on board for a rally higher. Even if it fails somewhere in the middle and then rolls back over again, you can make some money on that rally higher, because as of right now, this is still an uptrend, because this low hasn't exceeded the previous pivot low, which is that one right there. Uptrends are made of higher highs and higher lows, and then this is a new downtrend. But on the bigger chart, which really you can flip over to here, there's a pivot situation, pivot low there, maybe a pivot low there, pivot low here, and we haven't exceeded that to the downside to really put in. You either need to put in a new lower high and start putting in lower highs and lower lows, or you need to continue the higher highs and higher lows. Alright, and then bonds are looking like they're trying to get off the mat. They've been pretty much going lower for a while now. We had this whole sideways action in here, but then they've been going lower. Alright, and then what else we got? Oh yeah, I pulled FANG down here, which I just think these are good stocks to keep a look on. This is Meta, which is Facebook, and it is red and red, and not a whole lot of reason to get excited yet. This actually looks pretty bleak on the weekly chart. Like it's got a lot of room to pull back. You can see we pulled all the way back into this blue line here. That's similar kind of a thing could happen on the weekly chart, you know, in a heartbeat in just a few weeks. Apple, it looks like it's, again, pulled back pretty hard. Maybe we could start to see a bounce here because we have pulled back into the area where, I mean, basically that's one of the levels that we would have, you know, taken off from. You can see that kind of, it went back and forth before it finally took off, and now we're almost there. Amazon, you get the picture. So actually Amazon's obviously still one of the strongest stocks that there are. All these really are, and that's what we're looking for, is really strength. So alright, I'm going to leave that alone, and then we're going to flip over to our automatic trading systems and wrap up this weekly review. Here's the Russell, and these are futures that you literally trade. I mean, you turn them on and you turn them off, but the trading system runs itself. All you have to do is monitor it to make sure nothing goes wrong, because it is a computer. And we had a little pullback here today, which is, this is the most recent trades. So we got 817 and 818, so this is what's been going on lately. But before that we had a little rally, and generally overall the late, I mean, this from February till now, this thing has been a dud, but overall it's still fine. This is a year's worth of data from last year till this year to today. Actually, it's fine, it's just not my favorite. This one is quickly becoming not a favorite, but it's up there. So this is my Dow futures. This is the since February, and we got new green dots here in the last couple days. I think it was yesterday. These are the recent trades, and you can see we've had, you know, this is a big loser, but a lot of these are winners, and it's been trending generally up, which is why we got those new spike highs in our equity. Equity, of course, means our account value has been going up, and this is a measure of what our account value has done through all these trades. Literally, these trades plus, you know, there's 4 sheets of this in that quarter. You know, ever since February, there's 4 sheets of this, and the net result of it is, you know, we're up here around $28,000. So alright, and then this is what it looks like on a yearly basis. You can see those new green dots. That's what we're looking for, so that we get green dots. Then we had this giant pullback, and now we'd like to get some green dots going, just like we have in the past, and that could really add up to some money here, maybe into the next year cycle. Then here's the NASDAQ, which has been perking up lately, and we needed to get up past these old green dots, and we're getting there. We're not too far off, and that's since February. I did tweak this system. I tweaked both of them, the Dow and this one, just to eliminate some bad trades and to basically trade less, which I think is always a good thing to do if you can. But anyways, this is the net result of the last page of these trades, which here's all of today's trading action, which is pretty good. So it was a good trading day in the NASDAQ, and then this is what it looks like for the year, which is my favorite. So that's what we got, guys. Hope everybody has a great weekend, and we will catch you again trading again next week. Good night.